Welcome back to Squawk Alley. Virgin Trains USA, formerly known as Brightline, breaking ground today in Orlando, Florida, marking phase 2 of the only privately owned and operated intercity passenger rail service in the United States. Joining us now to discuss in a CNBC exclusive interview is Virgin Trains USA Chairman Wes Edens. He's also co-founder and co-CEO of Fortress Investment Group, as well as co-owner of the Milwaukee Bucks. Wes, congratulations on groundbreaking today. Thanks for joining us.
Well, thank you so much. It's really great to be here.
So let's talk a little bit about Virgin Trains USA. You're breaking ground on this final leg for the Florida rail. I know that's integral to the bigger, broader business model taking shape for the railroad. That said, there already seem to be some critics out there that believe the company could suffer the same fate that we've seen for other passenger rails in the past, given how hard it's been to turn profits historically for passenger railroads. How would you respond to those critics out there, and why do you believe, as you are breaking ground on Orlando and also focusing on other railroads in the western part of the United States, why do you believe that this will be a different type of business model?
Well, the city pairs model of the too far to drive, too short to fly models around the world have been very successful. So London, Paris, Madrid, Seville, Rome, Milan, those are all very successful, very profitable lines. And that's really the model that we're emulating here. So this is not a commuter line. Commuter lines are actually difficult to make a profit on. These longer lines, you're really competing against airlines. You're competing against, a very long and difficult journey by automobile. And they have proven to be very successful. Our own country, the Washington, D.C. to New York City, has been a very successful service on Acela. So we don't have to look very far to find a business model that leads us to believe this is going to be very successful.
So far, has ridership met your expectations?
It has. We've had over 1 million people have ridden already. So we opened the line, as you know, down in South Florida from Miami to West Palm Beach a little over a year ago. Have averaged about 100,000 people each month that are riding. It's a section of the line that we think is less desirable than obviously going all the way from Orlando down to Miami, but it's a very good segment as well. But the ridership has gone up incrementally every quarter. It's been very successful in terms of sponsorship, so very much meeting our expectations so far.
I want to get your thoughts on infrastructure spending. Obviously, it's no secret that there needs to be more projects, there needs to be more updates across the U.S. in many different areas. What do you think the private sector needs to see from government to spark more investment in bigger scale projects right now?
I think the key from a private sector standpoint is access to financing. So the financing that we have here is tax-exempt financing, PABS financing from the federal government through the conduit here in Florida. The same model that we're actually pursuing out in the west on our next line, which would be the Los Angeles to Las Vegas line. But getting access to the debt is kind of the critical component of it. There's lots and lots of investment capital in the private sector, many billions, trillions of dollars actually, that is interested and willing to invest in infrastructure projects. Getting the debt on the construction phases is the critical aspect of it. That's what took us a long time to get organized. We're 100% financed here, which is why we're having this wonderful event here in just a few minutes. But if I was giving advice to anybody in government, I'd say focusing on that is the way and the path to really stimulating other projects like this around the country.